Today we're going to analyze the stock of Amazon. I do hold Amazon on eToro in our portfolio. We're going to take a look at it. Here we are on Amazon's homepage on investing.com. Many of us know Amazon, and all that they do is shipping, and in the US you can get deliveries in 2-3 hours, and their global shipping distribution and order almost anything on Amazon. They also have AWS, which is Amazon Web Services, and a lot of major websites are built on AWS. AWS is basically the engine, as if I can put it that way, that drives major websites, and it's actually a very profitable profitable area for Amazon, and that's where a lot of investors look to in their earnings reports. But today is February the 5th, 2026. They are reporting earnings shortly, and we're taking a look at that stock to see if it's worth a buy and if maybe you add it to your portfolio, or who I think this stock is for. Its current price is $232 or $233 US dollars. Its most recent action, it took a dip of 2.36% in the most recent day, and in the past 52 weeks it is 161. It's gone from 161 to 258. It has sat in that range over the past 52 weeks, so it's seen a decline down to 161 and up to 258. So we are pushing towards the top end of that 52-week spread. If it breaks through that, stocks are usually expected to go higher if it breaks through that 52-week, but it can also present a barrier. Amazon is touted as one of the potential favorites for this year, for 2026. Fair value sits at 259. So 259 is where fair value is sitting. That is a potential upside of 11% from where it currently sits. Uncertainty around Amazon is low, so this does not fit in a speculative stock for people that follow me. That is high, the speculative stocks, and I only recommend you have 1 or 2 of those in your portfolio. So it sits in the low category. So Amazon, people know. There's plenty of history around Amazon. It's seen the ups and the downs. The spread for Amazon the expected spread is between 219 and 296. 296 is up from where it sits quite a bit at the moment, and 219, that expected spread there is not too far lower from where it currently sits. So there's that support there. 63 analysts give it an average price prediction of $296. That is significant. This is where I said is one of the favorites for the year, or expected favorites. Nobody knows what the future holds, but it's one of the expected favorites for the year. That's why 63 analysts are so bullish on it. Let's come down to some bull signs, bull signals, and bear signals. We'll read these top to bottom. It is trading at a low price to earnings ratio, which is a bull sign because its price to earnings is low. It's not had a great past year, and so 2025 it wasn't great for Amazon, and so it's considered a pretty good value, really. Trading at a high earnings multiple. So it's different from the price to earnings. If you have questions, pop in the comments. This is just a review, analyze the stock. I'm not going to get bogged down in details, but if you want to go over price to earnings and earnings multiples and all that, pop it in the comments. I can do a video on that as well. But it has a high earnings multiple. That is a bear signal. It is a prominent player, as many of us know, prominent player in the industry that it is in. And its cash flows can sufficiently cover its interest payments. So its cash flow can easily cover its debt payments as interest payments, which is a big thing for business. You want to know it can cover its debts. and the payments that are due. Oh, let me get out of that screen there. That's the search engine. And we're going to come over here just for this one really quickly. It sits at a great performance indicator. So based on these indicators here, it sits at a 4 out of 5. Amazon is a strong company. You know what you're getting. Let's look at short to long term. So 1 week. The past week, it has seen a dip of 3.6%. Tech companies across the board have been hit hard recently, and 3.6 is not actually bad, and that's most likely because of where Amazon already sits valuation wise. 3.6 isn't bad because a lot of tech companies have been hit a lot harder than that, of which we have experienced a little bit of that. In the past month, it is down 0.03%. So it's flat for the past month. In the past 3 months, it is down 6.8%. In the past year, it is down 1.3%. So we're positive on eToro. We've actually been we got in at a really good time last year, but it is down 1.3% for the past year. Past 5 years, it is up 39%, and the past 10 years, it is up 743%. What's interesting here about Amazon is these last two charts here. 5 years, it's not even done an average of 10% a year. It's done less than 40% over 5 years. Over 10 years, though, it's done 743%. So majority of that gain came in the first 5 years of that 10-year mark. What makes that interesting is a lot of companies have seen a great 5